Most people who earn good money eventually run into the same frustration. They're doing well professionally, their income is solid. But building real, lasting wealth still feels harder than it should. A big reason for that comes down to how we're taught to think about investing. We're encouraged, almost conditioned, to chase whatever has performed the best recently. The fund with the highest return. The sector that's been on a tear. The strategy everyone is suddenly talking about. It feels smart because it looks like momentum. It feels rational because the numbers are visible. And it feels safe because so many other people are doing it. But research and long-term outcomes show something very different. Chasing returns feels intelligent in the moment, but over time, it quietly works against you. In this video, I want to explain why that happens, how compounding actually works, and why building a system matters more than picking winners. Our brains are wired to focus on what just worked. This is known as recency bias, the tendency to assume recent performance will continue into the future. When something has gone up, it feels like proof. It feels like confirmation. Fear of missing out adds pressure. We don't want to be the only one sitting on the sidelines while others appear to be moving ahead. Media and social platforms amplify this effect constantly. Headlines celebrate top performers. Charts highlight recent winners. Very little attention is given to full market cycles or long-term outcomes. In the moment, chasing returns feels like informed decision-making. But most of the time, it's emotion disguised as logic. When we look at the data, the picture becomes much clearer. Multiple studies, especially from firms like Morningstar, show that the average investor earns less than the funds they invest in. Not because the investments themselves are bad, but because investors move in and out at the wrong times. Performance chasing usually means buying after prices have already risen and selling after they've fallen. Frequent switching also creates friction. Transaction fees, taxes, missed recovery periods. Individually, these costs seem small. Over years and decades, they compound into a significant drag on wealth. To understand why this happens, we need to talk about compounding. Compounding doesn't reward excitement. It rewards consistency. Small, steady gains held over long periods often outperform sporadic high returns that are constantly reset. Every time you jump in and out of investments, you interrupt the compounding process. You're effectively restarting the clock. The biggest advantage most people have isn't superior insight, it's time. But time only works in your favor if you stay invested. Starting early and remaining disciplined matters far more than catching the next surge. This is where systems come in. Real wealth isn't built through reactions. It's built through structure. That starts with clearly defined goals and realistic time horizons. What are you actually building toward? And how long do you have? Diversification spreads risk across assets instead of concentrating it in a single outcome. Automation removes emotion by making progress inevitable. Most importantly, a system gives you permission to ignore noise. Markets will always fluctuate. Headlines will always change. A good system keeps you aligned regardless of mood or momentum. Even the best system can fail if behavior isn't managed. Fear and greed push people to act at exactly the wrong moments. Overconfidence convinces us we can outsmart markets that humble professionals every day. Loss aversion makes short-term declines feel unbearable, even when they're normal and expected. The goal isn't to eliminate emotion, it's to design guardrails. Rules-based investing, automation, long-term perspective. Systems protect you from yourself. Chasing returns feels smart. But over time, it rarely builds lasting wealth. Compounding works best when it's protected by patience, discipline, and structure. Your real edge isn't predicting markets. It's designing a system you can stick with through uncertainty. If you want to go deeper into building systems that actually compound, comment, "Teach me a system," and I'll continue building on this framework in future videos.